So now we're on Module 13, Lease versus Purchase. And we're not going to spend a lot of time on this because the semester's about over, but it is good to be able to do your spreadsheet. So we're not covering everything in the chapter. Some of it is really good to read over, but in general, the really kind of take-home thing that we want to do here is to be able to evaluate leasing versus purchasing an asset. At different times, leasing capital assets will be cheaper, and at other times, purchasing them will be cheaper. It just depends on what the company's assumptions are on how they're determining those payments. There was periods of time where it was way, way, way cheaper to lease a pickup than it was to buy one, and then at other times, just the opposite. So it's really something that you need to consider the current situation and look at the timing of the cash flows, the depreciation, the taxes, all of that. Another thing to think about is there's agreements within the lease, like the time committed, the maximum amount you can use it, like if you can only go so many hours or so many miles. And if your level of consumption is higher than that, you need to think about the total cost that you'll be paying. So any additional fees at the beginning or end. We're going to use an Excel file to analyze it, but as a decision maker, you need to consider everything else. And so let's go to our Excel file. So you've got a handout. It looks a lot like this, and I'll show you how to build it. So first of all, we have our assumptions again in green. In this case, it's a New Holland loader. It costs $37,500 to buy it. We're going to put 0% down, 2.99% financing. Finance it over 4 years. Our tax rate's 30%. The salvage value is $26,000. We sell it after 4 years. Our loan payment, we're going to calculate that, is based upon the rate of 2.9% for 4 periods, and the present value is that original cost multiplied by 1 minus the percent down. Our discount rate is 7%, and then for our lease, a lease payment of $8,145.07, and the lease payments are 4. These numbers are very, very, very old, probably like 6 or 8 years old, but I actually did call an equipment dealer at the time that I did them. But just because this is going to show that leasing is a lot more expensive, there will be other times where it may be just the opposite, and that's why we need a spreadsheet like this and be able to analyze it. So one thing I could do is just put in equals my lease payment, F4, enter, and then I'm doing 4 of those, so drag it down 3 more times. I'm starting my rental payment in year 0 because a lot of times we do our lease payment up front. So if you lease it at the end of 2011, you'll make the first rental payment in 2011, and then you'll do 3 more after that. Your tax credit, though, we make the lease payment like in December of 2011, but we don't actually pay our taxes a lot of times in farming until February of the following year. So we lag the tax credit. But when we do that, it's going to be our lease payment multiplied by the tax rate up here, F4, is going to be our tax credit. And so that's going to be drug down. And then our net cash flow is going to be equal to the rental payment minus, it's the tax credit is a positive thing to us because it reduces our taxes, so we can subtract that off. And then your net is the difference. And I could drag that down. The only problem is if I changed up here and did 3 lease payments, you'll notice that it didn't do anything to here. It still kept as 4 lease payments. And so I want to build in, I'm going to put this back at 4, but I want to build in a little bit more functionality than what we have here. And so the way that we fix that is we put around here, this B8, we do an if statement. And so we say if, opening parentheses, then we need a test. And so in this case, we say if the So in this case, we want to do if F8, right here, the number of lease payments, F4 is greater than the year that we are, A13, comma, then if it's bigger than that, then we want to do the B8, the end, comma, else, put in a 0. So if the number of lease payments is bigger than the year, then do our lease payment, else put in a 0. And now drag that all the way down, and you'll see that it's there. And so if I put in 10 years, it's going to put 10 lease payments in there. And if I put in 4 or 2, it's just going to put in however many I tell it to. And my tax credit and the net cash flows are adjusting to it, so that's all I needed to do to build in that functionality. And so then, at the very end, I need to find my net present value, in this case referring to it as a cost, so equals NPV, opening parenthesis, my rate is my discount rate, comma, and remember on the NPV we've got to do years 1 through to the end, year 1 through 11, close parentheses, and then say plus year 0. And one thing I want to do is come back in here and change this back to 4 lease payments like it's supposed to be. And so you can see that we've got the net present cost. And I'm referring to this as a net present cost because these are all costs that we're using. And so this is just our cost, the equivalent of the cost over all of those different years in today's dollars.